Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwago. On the show today, AFDB slashes Africa Economic Outlook, says GDP could slump 3.4% in worst-case scenario. And Fitch says South Africa faces battle to rein in spending. And Angola agrees to comply fully with oil cuts after OPEC pressure. Let's get the show started now with intraday market numbers, which were in the green territory here in Africa. Well, South Africa's JSE index was 0.63% up, while the NSE sustained Tuesday's positive sentiment and was up 0.38% at intraday. In Egypt, the EGX30 gained the most at intraday by 1.10%. Kenya closed negative on Tuesday. Major stock markets in the Gulf region were subdued at intraday, with banking and real estate shares weighing on indices in the United Arab Emirates. In Dubai, the index slipped 0.69%, with blue-chip developer Emma Properties falling 1.1%, while the Abu Dhabi index eased 0.67%, weighed down by a 0.7% fall in the country's largest lender, First Abu Dhabi Bank. The Qatari index lost 0.21%, hurt by a 2.1% decline in Qatar Islamic Bank, and petrochemical maker Industries Qatar was down 1%. Only the market in Saudi Arabia was up marginally by 0.01%. And in Europe, markets were slightly lower in the morning as surging coronavirus cases in parts of the world continue to cast doubt over the prospect of a global economic recovery. Well, let's see what's driving sentiments today across Europe. And Conrad joins me now to tell us. Hello, Conrad. Good afternoon.
Good afternoon, Chimmy. Great to be back on Channels TV.
Good to see you. Well, except for China, most of the big stock markets have changed to reverse mode ahead of the second quarter earnings season. Investors are getting cautious. Was the optimism in recent weeks exaggerated? Has the market run ahead of itself?
Well, of course, there are traders out there who are concerned about this. Our share index here in Germany, the DAX, has gained around about 50% since the low point in March. On this very high level now, expectations are high, and they are even more intense than usually when it comes to the upcoming earnings season. Of course, all of those earnings report will tell us about the corona lockdown impact, but they will also contain outlooks. Outlooks is what counts for investors. And the question is now whether or not those outlooks will be strong enough to ignite confidence among investors again and to keep equity prices on the current levels or even help them further up. Today we got a bit of a mixed picture. Levi Strauss, the maker of the Levi's denim jeans, announced significant job cuts because the crisis has hit Levi's business hard, and the company says that the recovery is likely to be taking some time. On the other hand, Deutsche Post, our national postal service here in Germany, the company that also operates the international logistics company DHL, it says that it has come through the crisis quite okay. Every employee, every one of the 500,000 employees of Deutsche Post will get a €300 bonus in recognition of the enormous strain that the corona lockdown has put on the business of Deutsche Post. But more parcels were sent, and Deutsche Post says that the medium-term targets will likely be reached later, but they will be reached eventually. So a hesitantly positive outlook from Deutsche Post.
And talking about corporate news there, Daimler is having its annual shareholders meeting today. It's a virtual one. It's happening online only. So criticism of the management board will be kind of muffled, right?
Yes, the meeting itself will be very calm, but before this meeting, a number of investors already have come out with significant criticism, and unusually significant, I would say. Several large fund managers have said that they will not grant the supervisory board and the management board discharge. That's the technical term for investors telling the management board that they're not happy with the performance of the company. The most contentious point here is the sales of electric cars, while Daimler itself insists that the sales of its plug-in hybrid cars, that are cars run by a mixture of electric engines and combustion engines, those sales in Europe have increased. Analysts remind us that in terms of all electric cars, Daimler is still lagging behind in far numbers to its competitor Tesla. Tesla is selling 10 times more electric cars than Daimler does. Many analysts are convinced that Daimler has to be more inventive, has to develop more inventive spirit, and that cutting on labor costs is simply not enough.
All right, let's see what's happening in the metals market. The price of gold has risen to the highest level in nearly a decade. Now, the precious metal has a reputation of being a hedge against inflation. Is this the main reason why investors are buying it?
That's one reason, the recent quantitative easing measures, the very generous and even more generous monetary policy by the central banks has caused and reignited those speculations about inflation. But there's more. India is a large buyer of gold, and in recent weeks even more so. Traditionally in India, confidence is not very great in the traditional banking system, the system that usually provides investors with assets to invest in and investment opportunities. Now, India, for the first time in 40 years, is facing a recession this year, and that makes many people in India wonder what that will do to the financial system. More loans are expected to go bust, more banks are expected to get in trouble, and that has the result that Indians are searching for this very traditional investment asset, and that's gold.
All right, thank you very much for your time, Conrad. Enjoy the rest of the day. In the UK, the FTSE 250 index shed almost 1% early today as investors worry about the economic cost of COVID-19. Meanwhile, all eyes are on the Chancellor Rishi Sunak as he speaks today. Let's get update from Juliana. Hello, Juliana. Good afternoon. So what's the latest on Rishi Sunak's speech? Has he spoken, and what did he say?
He has spoken. He spoke at 12:30 local time, and at the moment the opposition MPs are being given the opportunity to answer some questions following that statement. It was only supposed to be a mini statement, but it's turned into a mini budget, and there's definitely lots to chew over. Basically, what the British government have done is spent about £30 billion in less than 30 minutes. I'll give you some highlights, Jimmy. I think, firstly, and what's really the most important standout point of Rishi Sunak's statement is the £9.6 billion the government will be putting into trying to retain jobs. We've spoken a lot on your programme about this furlough scheme, where it's a world-leading scheme with the British government are paying 80% of people's wages. That will be reduced to 60% in August. It will stop in October. But what the government have just announced is that they will be giving they'll be giving employers £1,000 for each employee that they keep employed from the end of October to January. That's going to cost them £9.6 billion. That's being heralded. We spoke earlier this morning about this new Kickstart scheme for 16 to 24-year-olds. That will be costing the government about £3 billion. They know, they've seen the statistics and the data. It is the youth that are going to be the most affected by the COVID-19 economic fallout. Now what they'll be doing is giving employers an opportunity to get these young people employed for 6 months, and that's costing them £3 million. Two other really important factors is that there will be a cut in value-added tax. There hasn't been a cut, I believe, since Gordon Brown was Prime Minister and Alistair Darling was his Chancellor. But VAT in Britain currently stands at 20%. to get the hospitality sector, which is the most important sector in the British economy, to get that moving again. VAT will be reduced from 20% to 5%. So that means anybody who wants to dine out, anybody who's going to the cinema, to the theatre, you will see that it costs much less to do so. And almost really significantly, especially for our overseas viewers, is that stamp duty is now going to be removed. So if you are buying a property up until March the 31st, you will no longer have to pay a stamp duty on that property. And that threshold has been shifted to £500,000. There were lots of cheering and jeering. There's so many other things for us to chew over, but I think I would take the full half an hour of your programme, Chimmy, and I know you don't want me to do that. But like I said, £30 billion in 30 minutes. I've got to say, the Labour opposition Chancellor, Annalise Dodds, I did feel really sorry for her because it was really difficult to come back to Rishi Sunak. You know, this was, again, his moment in the spotlight, spending here, there and everywhere. Basically, what they said is they agreed with everything he said, but they just don't think he's doing enough.
All that Sunak has said today, the market is already reacting, even though transport provider FedEx Group was the top faller on the FTSE 250, down 14.5%. That's after warning that it might not survive the COVID-19 crisis this morning. Well, I guess that's not the only thing driving the markets today. Sunak's speech, of course, investors will be chewing that this intraday. What's the numbers doing?
Absolutely. The FTSE had a pretty dull start at early trading, still pretty dull at intraday, and that's obviously because we know the FTSE All-Share really is a global market. The FTSE 250 is a domestic market. So really anything that happens domestically, you have to look at the pound to see whether or not it's a mover or shaker. But the All-Share is down 1.27%. At intraday, the FTSE 100 is down by over 1%, and the FTSE 250 is down by 0.85%. In that currencies market, the pound is up against the US dollar by 0.17%, up against the euro by 0.03%, and up against the Japanese yen by 0.14%. Definitely a sterling mover, this mini statement.
And the new figures from the Office for National Statistics confirm that nearly half of UK employees worked from home during the lockdown. What more can you tell us about this data released this morning?
It's interesting data, actually, and it's the first time we are getting a peek into what productivity has been like in Britain under COVID lockdown. The only thing is, it's a little bit of a dull start because this only looks at the first quarter of the year, Q1, January to March. We know lockdown didn't really kick in until March the 23rd, but it already has released some interesting facts. One of them being that output per worker fell by 3.1%. So although there was this global movement for some of us, not all of us, to be working from home, the fact of the matter is when people are working from home, according to the ONS, you're doing less work. So rather than working 9 to 5, perhaps some people are working 9 to 2 or working from 12 to 4. That's what this information is showing us. Also as well, a lot of the data has been put down to the government's furlough scheme, which again, we know the job retention scheme basically paid people to stay away from work. Of course, there was a reduction in productivity. It did also show that there was an increased amount of labour in some areas, real estate, manufacturing. They did see some increasing in labour. But what observers who've been looking at this statistic are trying to say is that, of course, March the 23rd to the end of March is only 8 days. So this data only looks at 8 days. There have been so many pictures, Chimmy, in the media of people, Brits, really flocking to the beach, enjoying days out when the weather has been increasingly hot. And there have been some concerns that people have really taken advantage of this furlough scheme and haven't been trying to upskill. They've been wasting away. And the data does show that the more time you spend away from work, the harder it is to get back into the job market. So they'll be interested to see just exactly how productivity in Q2 and Q3 are going to be looking at, because Q2 is the bulk of the lockdown. And if already reduction shows it's fallen this much it's likely to get worse in the next quarter.
Well, I guess investors will continue to digest that data. And of course, Rishi Sunak's speech this morning. I'm sure more reactions will emerge in the course of the day. Thank you and enjoy the rest of the day, Juliana. Angola has agreed with OPEC to comply fully with a global pact on supply curbs and will compensate for previous overproduction by cutting more from July to September. The Organization of the Petroleum Exporting Countries and Allies, led by Russia, a group known as OPEC Plus, agreed to cut oil output from May by a record 9.7 million barrels per day after the coronavirus crisis destroyed a third of global demand. The record cuts are now due to run to the end of July before tapering to 7.7 million barrels per day until December. But some OPEC members, including Angola, have not fully delivered on their agreed production cuts since May. Sources say Angola has now committed to improve its compliance with its quota and to make up for its May and June overproduction by cutting more in July to September. The African Development Bank has slashed its forecast for economic growth on the African continent because of the impact of the coronavirus. The bank now sees gross domestic product contracting by at least 1.7% this year and double that if the pandemic continues into the second half of 2020. The new projections released in a supplement of its economic outlook on Tuesday compared with a January forecast of 3.9% growth. The report says if the disease isn't swiftly addressed, Africa faces a major humanitarian and public health disaster. The Abidjan, Ivory Coast-based multilateral lender forecasts a partial recovery to expansion of about 3% next year. However, that would make up for an estimated cumulative loss to Africa's GDP of $173.1 billion to $236.7 billion for 2020 and 2021 due to the pandemic. The report also says the number of people living in extreme poverty on the continent could increase to 463 million because as many as 30 million jobs may be lost. And ratings agency Fitch says South Africa's plans to rein in government spending will be hard to implement due to low economic growth, adding that the country had a poor track record of delivering debt and spending cuts. Finance Minister Tito Mboweni said in an emergency budget in June that the government deficit would widen to 14.6% of gross domestic product in the 2020-2021 fiscal year, while debt will jump to 81.8% of GDP. However, the Treasury stuck with its promise of around 213 billion rand of spending cuts in the short term, the target set in February before the COVID-19 pandemic. This has been criticized by unions and some economists who believe the government should ramp up spending to drag the economy out of recession. Fitch downgraded South Africa's credit rating deeper into junk territory in April, citing the lack of a clear path towards debt stabilization and higher economic growth. The other top rating firms, Moody's and S&P, also rate the country at sub-investment grades. COVID-19 is having a devastating impact on all businesses across the globe and the people employed by those businesses. Businesses in Ghana, particularly startups, have not been spared. However, a Ghanaian entrepreneur finds delight in helping these businesses find solutions to enable them survive through the pandemic without collapsing. Now being joined by this entrepreneur and the managing partner at Bespoke Business Consulting in Ghana, John Kennedy. Hello, Mr. Kennedy. Thank you for joining us.
Hello, good afternoon to your viewers.
Good afternoon,
thanks for
Mr.
having
Kennedy.
me.
Now, can you give us a general overview
Yes.
of how much COVID-19 has affected businesses in Ghana?
Well, as projected at the beginning of this pandemic, it was stated that at the end of the year, we would understand that the impact of the pandemic on the economy will be so high. And right now, it has actually impacted almost all businesses, and the results are actually showing right now. Most people are now moving from their normal business activities to business activities which related to consumables and household items. These are the necessities that which people are actually getting on board now so that they can make their ends meet. So it has really affected the economy, and people are trying to manage and find their way around.
Sectors are the most hit.
The sectors that are most hit is almost every sector. The finance and the service sector is the driving force for the Ghanaian economy. And this sector is seriously hit because the financial sector is not able to lend funding to these businesses, especially the small scale and medium businesses, due to the COVID-19 pandemic. They are very skeptical to give them this funding because they are not sure they can be able to operate their business in such a way that they can get in profit and pay back the loan if as at when they give them the loans. The service industry is actually almost collapsing because they are also not able to get funding to provide services to their clients. So the only aspect of the sector that's actually enjoying more is the telecom sector and the IT sector, because right now people demand for more data, people demand for networking and all that. So they are the one cashing in now, as well as the pharmaceutical industry. They are also cashing in right now.
Now, as an entrepreneur, your interest is to save companies from collapsing. What are the key factors that lead to collapse of businesses aside from the issue of COVID-19?
Basically, each business has a peculiar challenge as at when they develop and when they grow. Now, what we understand based on my experience as a consultant dealing with these clients is that most of these businesses has no internal control procedures in. They don't have policy and procedure that are supposed to guide the operation and the administration of those businesses. These policies and procedures are like the constitution of the business. They actually help drive, they actually coordinate how things are supposed to be done in each of these organizations, but they are not able to put these things in place. The challenge here is that they go online, pick some public policies and put them in place, and this may not work for their organization. So what normally we advise is that you understand what your business wants, you know your strategic direction, and inculcate a kind of policy and procedure that would provide the solutions to your businesses. We could find that most of them have issues of financial challenges. They are not able to raise funds because they don't keep proper books. They are not able to raise funds because their structures are not in place. And you can also understand that the employees itself are very difficult to manage. So we try to diagnose all these things and understand where the challenge is. Apart from the pandemic, we understand where the challenge is and come in and provide solutions to these businesses. Most of the time, the management of the organization tries to override the businesses. And one thing I want to recognize here is that most of these small and middle-scale businesses tend to have their visions and their missions in their mind. Instead of clarifying these visions with their staff so that they can also understand it and move in the same strategic direction that they are supposed to go as well.
All right,
Lastly,
Mr. Kennedy.
I want to yes.
Yeah, we really don't have much time here. With now COVID-19 here, what solution do you have for these small businesses in Ghana struggling to survive? A quick one.
Basically, we just tend to diagnose what the problem is. Most of the time, they don't have peculiar problems, even though these problems may be similar to each businesses, but they are not so peculiar to each of the businesses. So we try to understand what the problem is, come in and try to solve the problem. We provide advisory services to all these businesses in a way that it will actually help to solve their problem and create a link between them and their customers, link between them and their suppliers, link between them and their stakeholders to make sure they're able to build the company and make the company grow and prevent collapsing of the business.
All right, thank you very much for your time, John Kennedy. He's the managing partner at Bespoke Business Consulting in Ghana. Well, it's on that note that we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimezi Obi Iwago.